Hey, good morning. It's Thursday, February 28th, last day of February 2019. Let's go. Bum, 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 bum. Hey, good morning, everybody. Comment allez-vous? Jumbo. Ohio. Wow, hey, Thursday already? Amazing. What an amazing week. Hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money, go or lose. No, stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So good morning. Yeah, good morning, everybody. Good morning, good morning, good morning, good morning, good morning, good morning. Anyways, hey, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. If you're new, perhaps you're just joining your very first webinar. Hey, well, I'm here to help. Traders Way wants you to succeed. They're investing into your education up front, hoping that out of loyalty and respect for what they're doing for you now, when you're ready to trade and trade real money, you'll choose Traders Way as your prime brokerage to your successful Forex trading business. So while you're developing those skills and confidence, why don't you visit Traders Way now? Open up that demo account, takes 30 seconds. When you're in your back office, download MT4. You can come down to this video. In the description below is a link. You can download my chart templates and indicators and all those files. Goes right into your MT4. Now your charts look like my charts, and now you have all the tools you need. You have me, you have my chart setups. Together, we can work on your skills. Some of you guys are brand new to these webinars. Some people have been following my work on YouTube for 15 years. Actually, on YouTube, it's only been 12 years or something. Pretty amazing, huh? Pretty amazing stuff. So I've been trading Forex that long. My first trading account didn't even come with charts. They didn't take credit cards. I think the minimum deposit was something like $10,000. And then you had to pay $200 a month for charts. Amazing, huh? Very, very amazing. So anyways, thank you for being on my team. Thank you for the loyalty and respect you show me every day. And not just to me, but to your fellow Forex traders in the chat. Thank you for keeping everything professional and focused. I appreciate you. Ba, 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 ba. Was that right, Chuck Duck? Oh. Gold was crazy. Okay, let's do gold. All right, crazy. Gold was crazy, says Unethical. Crazy. All right, let's see how crazy gold is. I like gold. It's crazy. All right, that doesn't look that crazy to me. Let's dissect this. Let me get out my drawing tool. Yeah, well, that's probably not even a bad thing, Chuck Duck, if that's the case. I mean, just the thought of people like funding an account with $100 and that kind of stuff, just... But whatever. Okay. What do we know here? if you're a bear, and I believe we talked about this. Pretty sure we talked about it last week. If not, it was the swing trading group. And if that's the case, I apologize. But nonetheless, we had a big move down. Okay, big move down. For some, that might be where they go from a bull to a bear. Now, do you have to? Did it fall enough where you're required to be a bull or a bear? To change from a bull to a bear on a 1 hour? No. Okay, no. Because it's only made a 50% retracement, so lots of bulls are going to stay bulls. That's fine. And we don't know that at the time. What you do know, though, and that what this blue area is indicating, is if you're a bull, this is a buying zone. Okay? We knew that on Friday, but also on Monday and Tuesday and all that kind of stuff, right? So before I get onto the bear move, I just want to point out the whole reason this blue area is around is you can see that I've fibbed something from much lower to a high. The blue area is simply a 50% approximately. And that if you're a bull for the weekly swing, you'd be over in here, and your actual entry would have been, it could have been here, it could have been here, it could have been here. It's all good. It's all good. They're all good trades. You say, good trades, Wayne. They may not have been profitable. Oh, I didn't say they were profitable. But if you're a bull, those are all very reasonable setups. Okay? Even if they didn't work out, or, you know, it's still a legitimate trade. That's a legitimately good trade. To have bought this yesterday, for example, or maybe even the day after. I think if you bought it Monday or Tuesday, I guess that's Tuesday Asia or something. Your stop is still down here. You might have almost got stopped out. Now you're breathing again. You really have to make a decision whether you're going to get out now at break even and try again. Okay. It's not a bad idea. That's certainly not the higher high, higher lows you would have planned on. Because if you bought it here or here, you would have expected this, this, and this. Well, so if your trade plan failed, it failed. Okay, whatever. Okay, what if you're a bear? Okay, a bearish swing starts here. This is your plan A. This is your plan B. And I believe, looking at this, I said plan B was the preferred one if you were a bear. It's just more believable. Okay, and so even last week on Friday, that I'm pretty sure, like I'm 90% sure I drew all this out. I can't remember if it was for this webinar or for the swing trading group. I can't remember. But we had it lined up. Like if you're a bear, there's your plan A, there's your plan B. If you're a bear, one of those is, that's right. And then I had this as plan C. If you're a bear, and I believe there was only one plan A. And plan A was this. Something like that. Okay. Unethical says he's still, he or she actually, because I don't know Unethical's gender, but he or she says, statistically, probably a he, it's still a 618. You don't want to go any lower than this. But on Chenzi, in South Africa, Unethical's like, dude, I'm a guy, Wayne. All right, well, how am I supposed to know, right? Can't assume. I have to test with my scientific methodology. Don't worry, I ain't going to test you. All right. That is still legit. Anything lower than that is very much undesirable. Marina! Well, Marina, we started 10 minutes ago. Okay, cool. So, like, that's still legitimately bullish, right? The scary part, though, is the smaller move on the smaller time frame, which I'll draw now in red. Okay, so that's just not ideal. It's just not ideal. That's all. What you're probably hoping for now is something like this is probably your trade plan next. Oh, so you believe the President of the United States timed the tweet specifically to that pivot point to manipulate the gold prices so that he could get a dip? Huh. Well, I can't really apply scientific methodology to that, so I don't know. I suppose that's subjective. Hey, go on. So anyways, what do you guys think? Are you a bull or a bear? By the way, this is gold, not oil. So, yeah. So I don't know about that tweet because the tweet had to do with oil. Anyways, check that out. I think that's the biggest learning part of this. I want you to think about this, okay? How does a market react after it's hit the logical target? Okay? And it may be different than other scenarios is all I'm saying, okay? Where there's just less bulls than there would have been in I think, in a different situation. Okay? That this played out as being important, okay? Doesn't mean this is over by any means, okay? This is your 618. I think, and this is going to get to unethicals situation, I guess, that I think it's fairly reasonable that it does this, okay, first. So I don't know where your stop is, unethical. I don't know if you're prepared to accept that risk. I think that is quite reasonable. And you can see I already have it marked out here. Okay. This might have been my plan B for bulls. Pretty sure it was. So I don't know if you can survive one of these or if you should take profit here and see what happens. And if it goes back up, you can always catch a dip. Or suffer the pullback if there's going to be one. It's your call. Okay. I think that's pretty likely. I think it's quite reasonable it does this first before going up. They don't short USD at the end of the month, bro. Nobody does that. So what do they do, Brooke? If they don't short, and by the way, you can't say everyone either, Brooke. So what happens? Well, in the example, remember yesterday we said people have the opportunity to plan over the next 72 hours for USD Mexican peso to fall. Are they shorting the US dollar? Sorta. But what are they really doing? Right? It's a substitution effect. What are they really doing? Okay? So for example, you have $10. You can buy 10 Cokes or 2 pizzas. Pizza, pizza. Pan, pan. Okay? Right? And you only have 10 bucks. You're going to have to look at your sort of your utility of how thirsty you are and how hungry you are. And at some point you want to kind of make a combination of these things, because you probably at dinner time, if you're really, really hungry, you don't want to drink 10 Cokes for dinner, right? Or you don't want to eat 2 pizzas. First of all, it's more pizza than you could possibly eat. So the utility of the second one is quite diminishing. So you're like, you know what? I'd really like some sort of combination of slices of pizza. So, or in this case, pizza pies and some sort of Coke, right? So it's not that you're selling a pizza to end up with 5 Cokes and 1 pizza. It's not that you're selling a pizza or something, right? You're substituting. So you're not really selling dollar per se. You're buying Mexican peso. That's what I'm trying to get to. Okay? So that's what's happening. You're substituting. And it just so happens people are converting 2.65. It's actually 2.63. Let's do it that way. 2.63 billion US dollars, and they're converting them to Mexican peso so that their loved ones in Mexico can spend the money. Okay, so they're not really selling per se. They're actually just buying that. So in the next 72 hours, the plan is, if things go well and dollar is at least neutral, this pair has a propensity to fall. Now, if the dollar happens to be weak at the exact same time this is going down, then this falls further. Do we know if today or tomorrow the dollar is going to be weak? No. But it's so much better if it happens to be weak anyways and the Mexican peso strengthens. And if so, you really get paid. You get paid better than, right? So if the dollar is strong tomorrow because of demand for US treasuries, and Mexican peso is strong because of repatriation flow, actually, sorry, I apologize, remittance flow, then this probably doesn't do a whole lot of anything. Because this will be strong for reasons unrelated to the Mexican peso, and the Mexican peso will be strong because no matter what happens to the dollar, money is moving to Mexico. So this ends up being neutral. Okay, and nothing really happens. Okay. So is anyone actually going to try to plan this out? Somewhere in the next 48 hours to get short this? Well, Brooke, we're not talking about the latter part of the month. We're talking about in the next, let's say, 5 days. We're not talking in business days. We're not talking necessarily the next 15 days. Okay? And depending on what the dollar does, this can fall for, 5 hours, 5 days, 5 weeks. Irrelevant to really the peso, it's more of what's going on with the dollar. So if the dollar happens to be weak long term anyways, stay in your trade longer. If the dollar tends to be strong in current market conditions, then take your money and run. Which pivot point, Ozabu? Zwak wants me to do euro dollar. Zwak, have you subscribed? Monthly. All right, cool. Yeah, because there's 2 centrals in here. That's why I have this whole area yellow. Cool. Right on. Good luck to you. Cool. Well, this one's for Zwak. Okay. Yesterday, we talked about this area as the area of importance. What do you think? Okay. We also said because of where we started this trip, even though we hit the M4, what this entry tells us is it really should go to R2. Hoop, there it is. Hoop, there it is. All right? Dang! Whoop, whoop. Nice. Huh? What do you think? Oh, I don't float my screens. Although you can buy something, at least there was, I don't know, 7 years ago, there was a thing you could buy, a plugin that you could buy to make your MT4 windows float, but they don't float. So if you're talking about the screens behind me, then let me show you. Okay. You see that? So what I do here is I just drag the whole platform. So they're not floating. Right? So for example, I'm going to click the button that says full, right? You see that? So that's one screen. Okay, I can go multiple screens, of course, right? But in this setup, see, if I wanted to, I can zoom in, Does that make sense? There. Hang on. Always gets caught on the carpet. Oh. Does that make sense? Yeah, well, multiple accounts for multiple scenarios, right? Fund, client, strategy, whatever. Cool. Right on, Stacy. How did you find that? I came to find out that the people who leave thumbs down and troll Wayne are other YouTubers that teach Forex. Really? How did you find out that? Is that right, Imad? I didn't know that. In that case, I'll have to go to MT5, huh? I don't know. Never heard that. Suppose it's going to happen someday. Well, Ed, this stuff only matters if foreigners are buying it. All right, so put it this way, Ed. Let's say the Fed wants to sell $1 billion worth of their bonds. They own them already. Where'd they get them? Quantitative easing. They went into the market, gave a commercial bank $1 billion, right? That goes into the commercial bank's vaults, right? Because they used to own a bond. Now they sold the bond to the Fed. So now the Fed gives the bank $1 billion in cash. That's in the bank's bank account. Then 20% of that gets parked back at the Fed, which is nice, right? And then the rest of that cash can then be loaned out, and the fractional reserve banking then says 10 billion enters the market. Well, that's the whole point of quantitative easing. However, the reverse is true now, where the Fed says, all right, we own $1 billion worth of bonds, but we don't want to own them anymore. So now they sell the bonds. Okay? Oh, is that true, guys? Wow, that'd be terrible. So anyways, so the banks sell the bonds now, and a commercial bank will say, ooh, that's a nice investment. I want to buy it. So the reverse is true. The cash leaves the commercial bank and goes to the Fed, but in exchange for the cash, they now own a bond. Okay? Cool, right? So what effect does that have on the dollar? Well, if a commercial bank is exchanging dollars for treasuries, or vice versa, treasuries for dollars, nothing happens to the USD. If a foreigner wants to buy them from the Fed, they're going to have to buy US dollars first and then buy the bond. In that case, demand for the US dollar goes up. Okay, so that's probably why you get mixed messages. No, it doesn't have to be, Ed. So let's say I buy $1 billion worth of bonds with $1 billion. How much does the value of the dollar change? Nothing. Nothing happened. There was no foreign exchange. I just exchanged, not euro to dollar or dollar to pound. No, I exchanged dollar for a treasury paid in dollars. Nothing happened. Okay? Now with my $1 billion bond, if I sell that to China, China's going to have to buy US dollars first and then pay me my money. So the answer is not necessarily dollar positive. But would it be dollar negative? Probably not dollar negative. So it's either neutral or potentially positive. Yeah. Okay. Well, oh yeah. So, okay, now Ed asked another one. Powell said they can't reduce because banks need reserves. Yes. So there are two types of reserves. There are required reserves, right? That has to do with the reserve requirement ratio of the central bank. And then there are excess reserves. Okay, so we just call this R and E. So you have to do the math now. 1 over R plus E. And this is called the money multiplier. And that tells you the impact. So, for example, if there are no excess reserves and only required reserves, and the reserve requirement ratio, let's say, is 10%, okay, 1 over 0.1, let's use the calculator to show this. Calculator. I'll do it this way just so we're all following along. Okay, so 1, where is it? 1 divided by 0.1, which is the 10% in my example, so 10. So here's the thing. Based on the whole math of the idea here, okay, 1 over R plus E, if R plus E is equal to 10%, equals 10 times the effect. The money is multiplied by 10. That's why it's called the multiplier, which means if the Fed sells 1 billion of their portfolio, it's multiplied 10 times by this formula, which means eventually, as it trickles through the economy, 10 billion is removed from the actual economy. How is it removed? Well, the economy is holding $1 billion in bonds, but eventually, because it comes out of the banking system, and the banking system is one where I take a deposit, I loan some money. I take another, right? And that, what does that happen? Well, what happens there? Well, then that gets put into another bank, and then that gets put into another bank, and that each time being multiplied slightly, okay, until it trickles through, right, adding up to 10B. So going back to Ed's comment about the feds need the banks need the reserves. Well, just imagine, like I just said, if the Fed reduces the balance sheet, they have to be careful because they're pulling money out of the banking system by giving those by taking the money and getting rid of the Fed's bond portfolio. Kevin, it's mathematics, so there isn't a number for that. Okay, but that's what the math shows. So how long? Well, again, so they lend $1 million. They lend let's say $100 to somebody. So someone takes out a $100 loan. Okay, well, they take out the loan because they want to spend it. So they go buy what they intended to buy with the $100. So now the $100 is exchanged for whatever they wanted to buy. So now the borrower gets what they wanted to buy, and the seller gets the $100. Cool. That goes into the seller's bank account. Based on our math here, the required reserve requirement ratio, the RRR, is 10%. So $10 gets parked at the Fed. $90 sits in the bank as a deposit, which gets loaned out. How fast does that $90 get loaned out by bank number 2? I don't know. But let's say, so now $90 gets loaned, right? Someone borrows $90 because they want to buy something for $90. That's why you take out a loan. So then that goes to bank number 3. And the money goes there. The person gets what they wanted to buy. And now $9 gets parked at the Fed. So now the Fed has $19. Right? And 81 is now in bank number 3, which then gets loaned out. How fast does it take bank number 3 to loan out the $81? Don't know. But you see this? This all started with $100. Zip, 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 and this goes on and on and on and on and on, theoretically, until you get to 0. Okay? But it gets multiplied and multiplied and multiplied and multiplied. The $100 gets loaned out over and over and over and over, but fractionally over and over and over and over. This is why poor countries that lack a banking system are poor. Because think of this. Think of this. If I make $1 billion deposit in my bank, over the course of time, because the United States has a good banking system, eventually $10 billion is circulated through the economy as investment. What happens to someone in a poor country when they have $1,000? They win $1,000 playing poker or something. What happens to the $1,000? It goes under the mattress. We're buried in a coffee can in the backyard. Does the $1,000 get distributed through their economy as investment? No. In countries like America, someone makes $1 billion, they put it in the bank. Eventually, there's $10 billion invested throughout the economy in loans, in real estate, etc. Okay? That's why rich countries are highly leveraged and filthy, stinking rich. I know I eat my breakfast every single day on a silver platter, but with gold spoons, you know. And poor people, they eat out of a dog bowl, I guess. But that's the banking system is a very, very important part of it. So again, going back to Ed's question, yeah, the Fed's got to be careful because if they sell 1B in their balance sheet, they're taking 10B out of the economy. Well, if the economy is red hot, smoking hot, how do we know it's smoking hot? Real estate prices are sky high because everybody's buying real estate because everybody's got money. Right? What else? Food prices are sky high. Oil prices are sky high. Insurance prices, healthcare, everything is unbelievably expensive, and we call that inflation because everybody's filthy, stinking rich. It's not Venezuelan inflation. Did you know they hit 1,000,000% inflation? My kids were learning about Venezuela yesterday at school. They didn't talk about it. They're like, oh, well, they produce oil and that's bad for the environment. I'm like, okay, yeah, and, right? Um, so anyways, they hit 1 million. That's not a proper inflation. But if everyone's filthy stinking rich, let's say, because the economy is red hot, the Fed can reduce the amount of money in the system simply by selling bonds. Okay? What happens to the price of something when you have a major player like the Fed coming in and selling whatever product? What happens to prices when things go on sale? What happens to the stock market if nobody's buying and everybody's selling? It was the Dukes. It was the Dukes. What happens? Prices fall. Therefore, companies that are in the market to buy, let's say now corporate bonds, they have to increase the yield they're offering people to entice them to invest. Okay? All of this is slowing the economy down. And the question is, does the Fed want to slow the economy down right now? Probably not, right? So now they're going to get together and they're going to announce that they're probably going to put that on pause. They don't want to slow the economy down because by reducing their balance sheet, so let's say now, I'm trying to use the words you're probably reading, by reducing the balance sheet, they're effectively raising interest rates. And that makes money expensive. That slows productivity and investment. Okay? And you'll be able to see that in how productive the economy is. Otherwise known as the gross domestic product. As you guys know, that equals C plus I plus G minus MX. Otherwise known as imports minus exports or net exports. If money is expensive, if your credit card goes to 30%, how much do you continue buying or do you cut back on your credit card spending? You cut back. Things are expensive. So consumer purchasing falls. Well, when businesses purchase things, a business can't go on vacation. But a business can buy equipment and factories and stuff, and we call that investment. G is government. The government's going to spend whatever it can. Okay? They're going to spend it actually no matter what happens. So they're not even affected by interest rates. Who cares? They're going to spend $1 trillion regardless of anything. And then imports minus exports, but then even high interest rates can create a strong dollar or a weak dollar, depending on the country, a weak currency or strong currency. And that in of itself is going to affect whether foreigners are buying our products or not, because it's all relative according to the foreign exchange market, right? Substitution effect. Does that answer it a little bit better, Ed? The Fed is going to be very cautious right now of unloading their balance sheet because it's likely to slow the economy down. And that's probably not their intent at this time. What about if the citizens of the country are lacking money to spend? All right, that means most likely foreign products are more expensive than domestic products, so you're going to be buying more domestically. A rich country like America, they don't buy American products because Americans are expensive. So they buy foreign products. So yes, Ed, they can use the balance sheet in a way that effectively raises interest rates without sort of making the declaration. But they're one and the same, and that's the confusing part even for me. When they say they're raising interest rates, right, then that means they're going to have to enter the market and sell. So it's sort of the same thing. By the way, if you're interested in topics like that, things like fractional reserve banking system and all that, that's all in the fundamentals course. So like within, I think, 5 hours of videos, probably the 4th hour of video, I start teaching you how to manage a balance sheet. Now, in this case, it's not necessarily a balance sheet for the Federal Reserve Bank, but it is a commercial bank balance sheet because I want you to understand the reasoning or the functionality of monetary policy and how it actually affects the banks. Okay? Because if you don't understand that, then talking about interest rates and stuff is meaningless because you don't actually understand how it impacts the economy. So by like the 4th hour, you're already learning how to manage the balance sheet of a commercial bank. And then we go into central banking. No, we don't get into repos and swaps. No, it's just balance sheet stuff. Okay. Cool. Good questions, guys. Good questions. All right. So anyways, we talked about this as being a buy area yesterday, and it went up. Oh. We talked about a central pivot predicting R2. Oh, look at that. Is that good enough? It's up to you. Wimping out around a psych level. Yeah, that can happen. Cool. Nothing more for me to say today. You can't buy that, and I wouldn't sell that. So if you didn't do it yesterday, what can I say? WTI. Still want this to go up, yo. Now what? Is it starting to look better? Well, we haven't made a higher high. So bears are thinking this. Bulls are thinking probably like da 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 da. Okay. And bulls, if you're a bull, you need to worry about this. So if I was a bear, for example, okay, bear, I would look for an opportunity in here, down, so it'd probably look like this. Or this. That's what I'd do if I was a bear. Which means if this goes up as a bull, I would have to anticipate that these are areas that I will be challenged. Okay. People are strange when you're a stranger. Look how big the American session is for WTI. Seems like all you have to decide right now is up or down. and you'll get that, whatever. Cool, right? The nice thing about crude, I used to teach how to scalp the open. It's something that I used to do back in the day, but that's when gold would move $3 or $4, not $1. But anyways, scalping the open used to be really interesting. I used to do actually two things. I'd scalp the open and I would scalp the close. Scalping the open was very interesting because early in the morning, basically this time of day, I would do some analysis, but all I was trying to figure out is where was it going to go today. And I found between 7 o'clock in the morning and 9 o'clock in the morning, just that 2-hour period, at least 2/3, maybe 3/4 of the average daily range would be achieved. Meaning, if I only traded 2 hours, I probably got almost entirely the whole day's worth of trading. Okay? Which is very interesting, isn't it? So let's see if we can go back in time. I kind of have to go back. It's hard on these 5-minute charts. But the first couple of hours, okay, I had to figure out what to do for the day, and then pa-chow. Let's see if it'll let me go back. I have to turn this one, I think, right? Yeah. Okay. See, just in this box. Nothing much happened there. So it's this gray area that you're setting up your trades. I didn't go farther back than that. People are strange when you're a stranger. Oh, there's 2 on here. It's weird. People look ugly when you're alone. Let's try this again. And days, 55 days. Let's see if we can. Okay. So now we're on this 5-minute chart. And so this gray little box is where I'd call it where you're doing your preparation for the day. And you're looking at things like support and resistance and trend, and you're trying to figure out in here, should you be a bull or a bear? And you can see it can move dramatically in the course of just an hour, right? So just in a couple of hours, you see, it actually created the top and the bottom for the day. In this case, in the first couple of hours, it caught 50% of the entire market. This caught 66% of the market. This produced, again, 66% of that market. This didn't do much, but again, if you were a seller, then you also got a lot of these. So it's a good time is what I'm trying to say. If you're going to trade oil, this is a good time to be ready to trade oil. Look at that, huh? Okay. Now the other time to trade oil that I used to do a lot, it was so super exciting, was oil close at 2:30. And that was crazy. Okay. Trading the oil close was crazy. It was insane. Some of the most insane trading. Now it's slow and steady, steady and slow. Women seem wicked when you're unwanted, when you're known. Initially, a little bit of dollar strength, 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 a little bit of dollar strength. Congruency. Okay. Now remember, none of this should change your analysis. This is a news event. Your analysis is based on the trend. Okay. So this shouldn't be like, oh my God, now I'm going to do something. Okay. So like going back to euro dollar, the boring trade here is you bought in here as a bull and you took profit in here as a bull. You hit 14 near an WR2, like you're done. You're done. Like that's it. You're done. And no matter what's happened, you're most likely to want to pick it up again next week. So you're not even in the market anymore. These are counter trend scalpers that are trying to trade the volatility on the news release. But news releases are not fundamentals. It's just news. Okay? Nothing's really changed in trading. You still look for plan A and plan B. Okay? Buying up here is very difficult or dangerous because you're paying a high price. Okay? A bull should actually be getting out of the market, not getting into the market. Like, look at this. This is where you're supposed to buy. Not only are you supposed to buy there, this is where bears are supposed to get out. Cool. Okay? This is where you're supposed to buy as a bull. This is where bulls are supposed to get out. So what's going to happen next? Well, what happened here when everything was so bearish? Well, the same thing could happen here. But we don't have a reversal pattern, so it's not likely to reverse yet, but we do know bulls are supposed to get out. You see what I mean? So we need like something like this to truly be a bear, like we need this to truly be a bull. Okay? Unfortunately, what happens is people that lack planning end up selling down here, and they end up buying up here, and it's all after the fact and all very late. Okay. So Zamo says U.S. Beats expectations. Okay, so maybe the Fed raises interest rates. Maybe that attracts dollar. Who knows? Okay. The problem is we're lacking proper, good, solid data because of the government shutdown and stuff, so don't make too big of a deal. Also, it's very backward looking, so who cares about what we did in the fourth quarter? Like, who cares? Why would I create a Telegram group? Cool. Let's keep her moving. A request for Aussie, but I did Aussie yesterday, and I tried to explain how boring the opportunity looks, and so I'm passing on the opportunity. So I'll mark it up again. I did it on a different chart, okay? But that just looks boring to me. I'm not interested. I'm going to look for better opportunities for my money. So who cares? Sorry, Aussies. But there you go. Yeah, that's all. There's just better things. I'm not saying you can't make money on it. There's just better things to be doing, right? Start a Telegram group. Oh. How much money would I charge for a Telegram group? What? You charge money? Forget it. USD yen is set up. It's weird. It's like bullish on a weekly, bearish on a monthly. That's an R as well, which is just, yeah, it's just not so good. Not so good. So, yeah. No, Kevin, I'm a greedy son of a gun. Okay, so I don't even really trade the USD yen just because I'm a macro trader, so that doesn't make a lot of sense, but it's interesting that it's there, and sometimes it moves, sometimes it doesn't. Whatever. Someone asked for USD Swiss franc, and I don't have it on this one, do I? So let's go over to this one. Yeah, you tried. Never hurts to ask, right? Never hurts to ask. See, the problem is a lot of my time goes to my wife and kids, so obviously I'm not going to give that up for money. And then a lot of my time goes to Harvard, and they charge me money, so it seems weird to spend, you know, a used Ferrari, spend money on a used Ferrari and then not drive it or something or whatever. So I'm trying to say, like, I have to spend money on Harvard, so to give up my Harvard time would have, I should at least be equally compensated, since I'm spending money on Harvard and then giving time to someone else. Their time has to at least bare minimum compensate for the expense of paying Harvard, right? Brinsley Watson, it should work. This is YouTube. It should work. Oh, is that right, Guy? Yeah. Okay. So this is, I got a request for USD Swiss franc. Okay. So the danger of that is it up here. Is there both funding currencies? But anyways, let's take a look. Okay. Quite a little story going on here. Okay. Looks like it's pretty straightforward trading if you're a bear. Okay. This is where, oops, wrong. Let me try this again. Okay. This is where bears were supposed to, or sorry, bulls were supposed to get out. This area is where bears were supposed to sell. This area here was where bears were supposed to sell. So that's been pretty easy if you're a bear. Okay. Bulls, in contrast, so let me change the color to, we'll do green. Okay, bulls were supposed to buy in here. Bulls were supposed to buy in here. Bulls were supposed to buy in here. So the question is like, okay, you would have made money here. Great. That was a great week. This one, you got a good start, collapsed on you. Question is, did you lose money? Did you break even? Okay. And then how does that make you feel this week? Are you going to be as aggressive as the week before? Probably not. But there is a trade there, but your stop might have been pretty close. But anyways, that failed. Now here's the interesting thing. This is where bears are supposed to stop being bears. So maybe that sets up a bull trade, right? So next week, where do you want to be a bull? Here. So maybe, just maybe, you get something like this. and maybe, just maybe, you survive the big test. The big test is a bear, I would say, has a 100% chance of trying again in this blue zone. They're going to want to take it down, and they're going to want to do it right in here. So that's where the battle is set. If this sets up with a reversal pattern, a bull's going to take it, and the bears are going to fight them out right here. And if you're an amateur and you trade somewhere in the middle, you're going to lose because the bulls and the bears are going to slaughter you. And if you get slaughtered, that means you're a pig. Cool, right? So it's all there. Looks like you're going to have to be patient. Take a look at some yens. Can you see the value of weekly pivots? Cool, right? This dotted line here is a M pivot. Pure price action, right? Breakout above this area, pull back, roll reversal buy, right? So like here's the breakout. Oh, you can't see that. Hang on. Okay. There's the breakout. There's the pullback. Okay. Here's the high. So breakout, pullback. Okay. These colors are meant to kind of like represent a dynamic Fibonacci level or whatever, but they're just clues that, okay, there's your 382, there's your 50%, there's your 618, whatever. If you like Fibonacci, or you like Fibonacci. If you like higher highs or higher lows. So the way I would mark this up would be somewhere in here. I'd want to buy the next pullback. Okay. So what color would you consider a buying opportunity? The golden area, the green area? Getting pretty close. Yeah, Highlander, right, Mickey? We did that already. It was like the second or third currency pair I covered today. So you're looking at more like a 50%. Well, it depends on where you're measuring. I'm measuring from here or from here. But anyways, so now you have permission to put your finger on the trigger if you're a scalper. Let's put some more intel on here. Okay. Look at that hourly chart, just crazy, huh? It blew through the pivots. Okay. If you go out to daily, you see I've put monthlies on here as well. So the high for the month of February was supposed to be up in here. We're not even close to that. It'd have to be a ginormous spike to get up there this month. Okay? So, what if you're a bear? Well, you need your reversal patterns first, right? So you have to identify where would you want to see a reversal pattern and then look for it. Monthly R. Gi, it is thought it would show it. Doesn't it show it here? This is pound yen. Pound yen. Pound yen. Or pivots yen, anyways. Down here. There's Aussie. Okay. As I've showed in the past, I like to know where I'm going before I make a decision on what to do. Right? Wayne, save me. How do we get out of here? Well, that really depends. Right? So when I look at this map, it doesn't tell me where I am, yet alone where to go. So this is sort of frightening. But it's because of this. Everything's messed up, right? So that's an additional risk that we had this month. On a weekly basis, it's also not doing a whole lot. We're barely moving along. This was a pretty decent one, but it's so narrow, right? So like this is an obvious buy if you're a bull. And I'd much rather be a bull than a bear. Although I'm expecting some bearishness soon, right? We've talked about that multiple times. But in this case, this is a pretty standard, boring little buy. You do that every day of the week. There's your boring little target. Right? And then the entry, here's your boring little buy again. But it didn't even hit target, right? So it's just like I showed you on the other pairs, there's just probably better things for you to be doing than Aussie right now. Now maybe that changes. Okay? That changes. So for example, if you think the stock market's coming down in the month of March, or you expect yen repatriation in March, then you're probably going to do that next week. Okay? Which means you may do it today or tomorrow. it's about time. So there you go. So what do, Wayne? Create a plan. Cool. Thank you, guys. I think we'll call it a day. So tomorrow is a Friday. Great day for swing trading. Great day for counter trend trading. So we'll do yen pairs tomorrow, dollar pairs tomorrow, gold and oil tomorrow. Should be great. Then the week after, we got non-farm payrolls. You know, lots going on coming up. Lots to look forward to. Remember, we're expecting Mexican peso strength today, especially, it's today and tomorrow, but especially if US dollar happens to be weak, irregardless of what happens with peso. So the perfect storm is weak dollar anyways, which usually means stock market rally, and remittance. Cool. In March, I've been pretty clear. I'm expecting some yen strength. Doesn't always happen, but it definitely can happen. So it's on the radar screen. So starting tomorrow, we're going to start pondering it. It's a hypothesis, and we're going to use scientific methodology to confirm or deny the hypotheses. So thank you for being on my team. Thank you for being a subscriber. If you're not a subscriber, click the Forex.Today logo. And I've done probably or associated with about 4,000 videos on YouTube. Feel free to watch them all. It'll only take you 10 years. And then I'll see you at tradersway.com, huh? Remember, open an account, download MT4, download my chart templates in the link before. You can have them. Remember, like, subscribe, comment, please. See you tomorrow.